Good day, everyone. Trust you're doing well today. Today, we're talking about how the Nigeria stock market traded last week, day by day, and what may possibly happen this new week. Okay, so last week, right, the Nigeria stock market did something that usually gets experienced investors paying close attention. It didn't just go up, right? It went up with strong buying, strong trading volume, and support from some of the biggest companies on the Nigerian Exchange. Now, if you are new to investing in the stock market, you might be thinking, so what, right? Stocks goes up on the time. Well, not exactly. Sometimes, right, the market goes up because only one or two big companies are pulling everything higher. And sometimes it goes up because very few people are buying, which makes the move weak and unreliable. But this week was different. The NGX share index gained 1.59%, closing at 247,357,000 points. And more importantly, the move was backed by some of the strongest signs investor likes to see, right? But here's the question though, is this the beginning of a bigger rally, or is it just like a temporary bounce before another drop? Now let's break down everything as we look at how the week unfolded day by day. Last week Monday gave investors a strong reason to smile. The market jumped from 1.12%, pushing the all share index to 246, 193,000 points. Now, one of the biggest story that day was First Holdco. First Holdco gained almost 10% in a single trading session. That tells us investors were so eager to buy First Holdco. It was like the market woke up and after a quiet period and suddenly became active again. Then came Tuesday, the market still moved higher, although not as much. It gained another 0.20%. Now, some people might look at that and say, well, that's a smaller gain. Guess what? They're right. But smaller gains aren't always bad. Sometimes a slower climb is actually healthier. Why? Because it shows investors are buying carefully instead of rushing into the markets out of excitement. Now, the strongest buy of that day came from the banking and industrial companies, right? And something about those sectors is this. These aren't small speculative businesses. They are companies with real earnings, real customers, and real businesses behind them. So when investors choose these companies first, right, it usually shows confidence rather than emotion. Then came Wednesday. On Wednesday, right, market finally took a break. The index dropped by 0.51%. Now, here is where many people, make a mistake. The moment they see one red day, they panic. They assume the rally is over. But experienced investors often ask a different question. They don't ask, did the market fall? They ask, why did the market fall? And in this case, the answer was actually encouraging. Many investors simply decided to take some profit after two, strong days of gain. Like profit taking. There is absolutely nothing wrong with some investors deciding to take profit because that's why they invest in anyway. But that's exactly what many investors did. And here is another important detail. Even though prices fell on Wednesday, trading volume increased sharply to about 1.25 billion shares. That tells us one thing. It means the market was very active. People were trading, some were selling. Basically, others were busy buying those same shares that was getting sold due to profit taking. Now, the market wasn't becoming weak because of that. It was simply changing hands. Then by Thursday, there was change in the mood in the market, right? The market bounced back with a gain of almost 1%. One major reason was a huge block trade involving First Holdco. Now, what is a block trade? A block trade is simply a very large transaction usually made by institutional investors. Who are institutional investors? They are, organizations like pension funds, insurance companies, hedge funds, large investment companies. Now, unlike many individual investors, this organization usually spend quite a lot of time researching companies before investing millions or even billions of naira. So when institutions are buying heavily, many investors pay close attention. It doesn't guarantee prices will keep rising. However, it does shows confidence in the market. Then Friday arrived. The market slipped slightly by 0.19%. Some stocks like Custodian, Name Insurance, and Boa Cement finished among the top gainers, while others like Presco, Thomas White ended up, in a sell-off position. Once again, some investors became, worried because the market ended the week with a decline. But here is something many people missed. Even after Friday's small drop, right, the market still finished the entire week 1.59% higher. Think about climbing 5 flights of stairs. If you step down one step before reaching the top, you're pretty much still higher than where you started. That's exactly what happened last week. Friday wasn't a collapse, it was simply a small pause after a strong climb. Now let's talk about something that often separates strong rallies from weak ones: trade volume. This is one of the most important things professional investors watch. Last week, about 4.43 billion shares were traded on the Nigeria stock market. That was the highest weekly trading volume seen in recent weeks. But why does volume matter so much? Now imagine you're watching an election. Now, if only 50 people amongst millions of population voted, it's difficult to actually know what everyone really thinks. But if millions of people voted in that election, the result carries much more weight. The stock market works the same way as well. When prices rise while a lot of investors are actively buying and selling, it usually tells us the market has strong support. It isn't just a handful of people pushing prices around. It also indicates many investors are actively participating. That makes the rally more believable. Another positive sign was something called market breadth. Last week, the gains weren't limited to just one or two names. Banking stocks participated, industrial sector stocks participated, insurance sector stocks, participated as well. Now, that broad participation in those three sectors is the reason why we can conclude there was a bullish continuation in the market last week. Now, here is where things become really interesting because if this rally is real, how do we know when it's starting to lose strength? There are a few warning signs every investor should watch, right? So the first one is the 245,000 level on the all share index. Think of it like the floor inside a building. As long as you're standing on that floor, you are stable. But if the floor suddenly disappears, there's quite a problem. So if the market falls below 245,000 points, right, especially with heavy trading volume, it could be an early warning that sellers are becoming stronger. Another thing to watch is the banking sector. Right now, banks are helping lead the recovery, right? So if those leading bank stocks suddenly begin falling sharply, it could be a sign that the market is losing one of its strongest engines. And finally, investors should always keep an eye on the bigger economy. Things like sharp fall in global oil prices, a weaker naira, rising inflation, or unexpected policy changes from the Central Bank of Nigeria can all affect investors' confidence. The stock market doesn't exist in isolation. It reacts to what is happening in the economy. So what's the biggest lesson from everything we have discussed so far today? Well, basically, the Nigerian stock market is showing encouraging signs of recovery. That's known, right? And the 1.59% weekly gain is important. But what makes it even more meaningful is how the market achieved that gain. It wasn't driven by only one company. It also wasn't supported by weak trading activities, right? So instead, it came with strong volume, healthy participation across several sectors, and buying interest in some of Nigeria's biggest and strongest companies. That doesn't mean the market will only move upward from here, okay? So there will be days when prices fall. There will be days when investors take profits, right? And there will be days when fear returns. But based on what we have seen so far, the overall recovery remains intact. The key thing to watch now is whether buyers can continue defending important support levels and whether institutional investors remain active in the markets in the weeks ahead. Because in the stock market, it's never just about whether prices move. It's about why they are moving. And right now, the reasons behind this recovery looks much more healthier, than many people may realize. If you're investing in the Nigeria stock market or you are planning to start, don't focus only on whether the market was green or red today. Pay attention to the bigger picture. Watch the trend or watch the volume. Watch where smart money is going. Because those clues often tell the real story long before the headline do. Now, if you're looking to get regular stocks recommendation and stock market tips for both Nigeria and US stocks, I have a Telegram channel where I share frequent market insights and enable you beat the market. So if you're interested, you can find the Telegram link in the description box of this video below. If you gain value from this video, please like and subscribe so you do not miss my next video. All right. Have a nice day. Bye.